All right, let's talk about what just happened on Wall Street. Because after a really choppy month, the market suddenly, and I mean suddenly, caught fire. So we're going to break down exactly what went on, piece by piece.
It all kicked off with the big indices just surging. Yeah, the Dow Jones Industrial Average really leading the pack, climbing a very solid 1.1% by the time the closing bell rang.
And the S&P 500 was right there with it, tacking on a full 1%. It closed above 6,700, which is a really big psychological line in the sand for traders.
And yeah, the tech-heavy Nasdaq got in on the action too, finishing the day strong with nearly a 1% gain. And that's despite some wild internal drama between the big tech names, which we are absolutely going to get into in a minute. It was just a broad, powerful day. Okay, so you see all this green on the screen, and you gotta ask, what lit the fire? What was the one single spark that set off this whole rally? Because this wasn't about a dozen different little things, it was one single, overwhelming force.
The entire story of the day, everything we just saw, it all hinges on this one powerful idea. The market thinks the Federal Reserve is about to pivot. Hard.
And, I mean, look at this. By the end of trading, the market was pricing in a staggering 81% chance that the Fed is actually going to cut interest rates at its next meeting in December. That is not a maybe. That is a huge conviction play. Now, this is where it gets really incredible. Look at the speed of this change. Just 1 week ago, those odds were sitting at a kind of tentative 42%. To see them practically double in a few trading days shows you just how massive and how rapid this shift in thinking has been. So what caused that incredible jump? It was all about what we call dovish signals. Think of it as the Fed's way of hinting they might ease up. We got some softer economic data, maybe retail sales cooled off a bit, and we heard some more cautious, careful language from Fed officials. The market put it all together and just ran with it. So with all this optimism flying around, you'd think every single stock was having a party, right? Well, not exactly. When you zoom in on the stock market, you see a really complex and, frankly, fascinating picture. For most of the market, the hope of lower rates was like a shot of adrenaline. Any sector that's sensitive to borrowing costs, small companies that need loans to grow, or the housing market that depends on mortgages, they absolutely soared. The buying pressure was intense, with more than 2 stocks rising for every single one that fell. But this is where the real drama was. Inside big tech, it was practically a civil war. You had Google's parent, Alphabet, surging 4% because of excitement over its new AI model. But that exact same good news was seen as a direct threat to Nvidia, which fell almost 2% on fears that its biggest customers might start making their own chips. What was great for one was terrible for the other. Okay, but we have to pump the brakes for just a second and add some context. It's easy to get carried away by one big party of a day. But if we zoom out, November has actually been a pretty rough month. Both the S&P 500 and the Nasdaq are still down pretty significantly. So yeah, one good day doesn't erase weeks of volatility. And believe me, this story was way bigger than just stocks. Those signals from the Fed sent powerful ripples through every other asset class out there, from old-school commodities all the way to crypto. And what we saw was this really fascinating split. Even as stock traders were cheering, you had investors in other corners of the market kind of hedging their bets, looking for a bit of safety and bracing for whatever comes next. You can see that split personality perfectly right here. Gold, the classic safe haven, basically held its ground, which tells you people are still worried about geopolitical risk. Crude oil, on the other hand, just fell on basic supply and demand pressures. And Bitcoin, well, it caught a little bit of a rebound with the stock market. But let's be honest, it's still nursing a brutal 30% loss for the month. All right, so after an action-packed day like that, what happens next? This single day gives us a fascinating look into the market's current mindset and all the tensions that are going to define the next few weeks. The optimism around the Fed is real. You can feel it. But it's living right alongside some pretty significant risks that are just simmering in the background. We're talking US-China trade, tensions over resources, fragile situations in the Middle East, and the ongoing debate about whether AI stocks are in a massive bubble. Plenty of reasons to be cautious. So what's the big takeaway from all this? Well, the consensus on Wall Street seems to be that this is not the time for an all-in bet. It's about a more balanced, cautious strategy. Stay invested in big growth areas like AI, but also keep some protection with hedges like gold, and have cash ready to go if the market gives you a buying opportunity. And that, of course, leaves us with the million-dollar question. Was today the real deal? The start of a new sustained uptrend fueled by the Fed? Or was it just a brief holiday rally, a little sugar rush, before the market has to confront all those bigger, lingering risks? Only time will tell, but the next few weeks are going to be absolutely crucial.